Hey traders, welcome back to another video at For Example. And this week we're going to be discussing a topic that affects many individuals in the world of trading and investing. And you can see by the title, why your trades aren't consistent. So let's get into it. Now, we've all had those days when we feel like our trades aren't going as planned, and it can be very frustrating and confusing, to say the least, to understand why. And essentially, one of the common factors, and the first common factor that affects your trading results, are human emotions. Now, we are human beings, we are made with emotion, and a lot of times, a lot of traders on YouTube will tell you that you need to remove those emotions in order to trade, but you are not a robot, you are not a machine. So, how do you actually allow your human emotions to work for you in trading? Well, there's a couple of ways. The first thing is you need to recognize what emotions are actually leading you to trade. If you are in a state of greed, fear, anxiety, you will not make money trading, plain and simple. Many people want to trade so that they can make more money, so that they could then quit their jobs to do whatever it is they want to do with trading. And that can actually have the inverse effect to what they're expecting, because now that they are solely reliant and solely dependent upon trading for their income, they now put extra pressure and additional pressure onto themselves to make money from the markets. Now, the markets don't owe you anything. The markets are moving at their own pace and at their own speed, and they don't owe you anything. They're not on your timeline. However, so many traders seem to think that just because they could read the markets, or just because they know how to execute a trade, that it automatically means that things must happen on their time, on their dime. And it doesn't work like that, unfortunately. So emotions such as greed, fear, and anxiety will play into your trading habits, and it's essential that you recognize them and manage them effectively. The key to being a great trader is to stay neutral and objective when entering trades. How do you stay neutral and objective? Funnily enough, you care less about the result and you care more about the process. You care less about the result and more about the process. Key. By caring less about the result and focusing more on the process, you reduce the influence of your emotions and you actually improve your chances of making consistent profits. This is something that happens a lot for day traders. Day traders, because they are essentially in the title of who they are, they've identified them as people who make money within a day. They have already constrained and put a time pressure on them, their profits. They've put a time pressure on their trades, because for them it's as though if they don't make that money today, then what was the point? And it's actually one of the reasons why I started to move away from day trading, because I actually found that it would affect my patience. It would cause me to become more anxious. It would cause me to become more rushed. It would cause me to become more frustrated in the market if I didn't get the result I wanted to that day. And I actually found that when I moved towards swing trading, that it helped to alleviate just my time pressure and time sensitivity when it came to making profit. It allowed me to see things from a higher time frame perspective, from a longer time frame point of view, which essentially helped me in my trading, because it would make me go, right, you know what, I'm gonna take a break, or I've executed this trade, now I'm gonna leave the market to do what it does and get to where it needs to get to. So moving into swing trading definitely was the better decision for me to do. And also, I don't want to be chained to my desk. And if you'd have seen in our previous video how I called that 1 to 78, you would see that moving away from day trading into swing trading just creates a lot less pressure and a lot more profit. Another key aspect of consistent trading is understanding your trading system. When we develop our strategies, we should always perform a thorough test to ensure that our system is both reliable and profitable. Now, notice I didn't say back test, I said a thorough test. What's the difference between a thorough test and a thorough back test? The issue with back testing is that when you back test, you are not factoring in your emotions. You're also not factoring in the fact that you don't know where the market is going to go. When you backtest, you know where the market's going. Even if you do the replay mode, even if you try to do the, if you use other tools that allow you to see it in real time, even though it's in the past, you do have an idea of what's going on and what's happening. And it's not that real life execution of being in the trade, watching it fluctuate before moving in your direction or going against you. So with that being said, testing your system in real time is always going to be more favorable than backtesting, in my opinion. It will help you to identify any weaknesses or areas where you need to improve in your trading performance by testing it, as opposed to backtesting it. By continually refining and fine-tuning your system, you can increase your chances of making consistent profits over time. Now, for example, we teach you market logic, but we also teach you how to actually make your trading system work for you and your lifestyle. Again, another thing about trading is that we all come into it so that we don't have to work. And what day traders do is they essentially tie themselves to a job of trading again. Whereas the whole point of getting into trading was so that you weren't tied down to a job. So yeah, for me, swing trading is exactly where my comfortability sits with the markets, and it also allows me to go off and do whatever I want, whilst allowing money to work for me in the background. Lastly, let's not forget the importance of staying focused and committed to your goal. Now, this is so important. Trading can be challenging and it is a demanding journey, but by staying focused on your objectives and maintaining a strong work ethic, of course, we can overcome the obstacles that come our way and achieve consistent success. Some of us, and it might seem like I'm coming for day traders throughout this whole video, but it comes from experience, trust me. Some of us, when it comes to trading, we want such quick results that we actually forsake longer term success because we are so short-term focused, and that doesn't work for trading. If you look at the FTSE 100, if you look at the S&P 500, these are instruments that have been traded for long periods of time, and they are consistent over a long period of time. When it comes to trading, it's no different. It's about being consistent over a long period of time that reaps the results. If you are short-term focused, then you need to double down on being consistent in that focus, essentially. So when you're short-term focused, you basically need to show up day in, day out with that short-term focus in a consistent way that doesn't affect your bottom line. It doesn't affect your P&L. That is very difficult to do when you are focused on making profit that day, because again, going back to the first point of having emotions and being a human, when you come to the markets every day, if Monday you don't make profit, Tuesday, what that means is you need to come back on Tuesday with the same exact consistency and discipline on the Tuesday that you had on the Monday, despite the result that you got on Monday. Now, because you are a human, if you wake up on Monday and you've identified yourself as a day trader and you don't make money that day, as much as you may tell yourself it's fine, there's tomorrow, there's the next day, for some people that works. However, for me, I would rather do the work once and reap the benefits over a long period of time, rather than get up and have to do the same work every single day, knowing that regardless of the amount of work that I put in, the result may be positive, it may be negative. I'd rather maximize on something once than to do it repeatedly over a period of time and get, let's face it, smaller results. But maybe I hit the high of Monday, I made money. So yeah, excellent. Tuesday, I didn't make money. Wednesday, I made money, etc. So you need to remain focused on your goal, and having a trading system that allows you to remain focused on the long-term goal is going to be the best thing for you. It's going to make you more consistent. It's going to make you show up, and it's going to make you less anxious, fearful, and greedy when it comes to the markets. And it's going to allow you to pay yourself over a period of time. You cannot rush the results of trading. You cannot, absolutely not. You need to stay focused over a long period of time, and that is exactly what's going to get you to where you need to get to. So with that being said, consistent trading, we know, is not an overnight process. It's rather a lifelong commitment to self-improvement and discipline. It's about making money over a sustained period of time. It's about recognizing and addressing the factors that contribute to your inconsistent outcomes, which we at For Example will help you to alleviate and to recognize. We can improve our chances of making profitable and sustainable trades by remembering that the key to success in trading is understanding our limitations, managing our emotions, and staying committed to our goals. Catch us in the next video where we'll be discussing whether you need to trade one pair only or whether you should be trading multiple pairs collectively. With that being said, thank you for tuning into this video. Please like, comment, and subscribe, and let us know what you'd like to see in the future installments. Take care.